You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and you're listening to the largest, fastest-growing podcast for Toronto real estate on iTunes, Spotify, and Google Podcasts. I'm your host, Bradley. Here, I'm an investor and a broker, and I love analyzing the market for myself and for my clients. And I just so happen to have the greatest Joe on earth sitting beside me. Not a guy named Joe. This beautiful coffee of mine really wakes me up and freshens things up on a Tuesday morning. And today we're going to cover some great stuff. We're going to talk about, will Canadian real estate prices decline? Don't ask RE/MAX and expect a non-biased answer. And why are Toronto homes so damn unaffordable? We're going to talk about that. Maybe we're looking at things the wrong way. And the second wave is officially here. Now what? With things seeming to be more and more like they're going to enter stage 2 here, I mean, it's just kind of starting to set in for me and my family, driving us a little crazy. This damn pandemic, right? It cancels all the fun activities, the sports, the concerts, Cirque du Soleil. No fair. With our luck, even if we did open up, the circus would get hit by some kind of wildfires or something, right? Man, wouldn't that be intense? But hey, my philosophy is if you don't like my jokes, you either laugh with me or laugh at me. In either case, we got some good vibes. And today, before we jump into our content, I'm going to remind you, make sure you hit the subscribe button, first of all. Continue to follow our contents. It's great. I like it anyways, if nobody else. And we also are sharing high cash flow deals. I wanted to give you guys something a little bit extra. These high cash flow properties just outside of the city, but I'm also starting to get access to a lot of pre-power of sale deals, which are obviously highly discounted, as well as off-market distressed properties. Make sure you jump in. The link is down below. You can sign up for that. And we're going to continue to send out great listings. The main thing here is we want to share the money, share the love. All right, let's talk about whether the Canadian real estate prices will decline. And according to RE/MAX, this article says, not likely. Surprise. The strength of the Canadian real estate market has continued to prove itself time and time again during the pandemic. While we're not out of the woods yet, we are expecting continued growth for the duration of 2020 with an active market for the foreseeable future and balanced conditions at the national level into 2021. This is great news for Canadians. I'm sure you guys are feeling better already. So why all the fear-mongering by the CMHC? Well, I want to hear RE/MAX's take on this. We expressed our concern over CMHC's predictions in the spring, and Dugan's latest statement continues to raise eyebrows, ours and other industry insiders as well, as the Canadian housing market stays on its upward course. While I can appreciate some of the reasoning that went into CMHC's prediction, especially in the spring when so much was still unknown, the market data doesn't show such a steep price decline, especially with the two largest real estate markets, Toronto and Vancouver, continuing their upward momentum. The prairies are facing different circumstances and challenges due to the resource sector. However, Ontario and BC are expected to offset slower activity in Saskatchewan and Alberta. In other words, RE/MAX believes overall the Canadian market is going to be great. It's going to be great. A little different than some of the news we've been hearing. We'll talk about that. But last month, we at RE/MAX Canada revised our forecast for national average house prices in 2020, increasing it to up 4.6% from our original price expectation of 3.6% at the end of last year. So things are getting better, not worse, in the eyes of RE/MAX. In terms of declining prices, quote, the impact was on rent as opposed to home ownership, said Benjamin Tal, the chief economist at CIBC World Markets. His optimism in the Canadian housing market was due to continued low interest rates and strong pent-up demand. 80% of jobs lost were in the service sector. Many of them were low income and many of them were renters, working for places like Amazon, paying for that basement apartment. And the impact was on rent as opposed to home ownership, he noted. Have we not seen that? We're still kind of feeling that. The lease side, the rental side, it's taken a bit of a hit. It's kind of found a bottom, I believe. But that said, nowhere in the world of real estate prices have we seen an impact of COVID. It doesn't seem to have happened. And we'll talk a little bit about why that is. Here's what they say. RBC Economics recently reported that a large-scale decline was unlikely. RBC. The pandemic completely disrupted normal seasonal patterns by shifting activity from the spring to the summer. And with pent-up demand now largely exhausted, we see activity cooling later this fall. This should let some of the steam out of the prices, though not to the point of causing outright declines on a large scale. In other words, RBC does not agree with CMHC. They don't agree with Moody's. What does TD have to say? Well, Beata Saranchi, I don't know if that's how you say it, from TD says, the level of unemployment suggests the housing market should not be as active as it is. However, when you look at income levels, it all makes sense. Incomes today aren't behaving like we're in a recession. Remember we talked about how we got these job loss, unemployment. That should be critical, a devastation to our market. Well, there's a complete disconnect, she says, between the employment rate and income levels, which is adding fuel to the housing market. A great way of saying government support has sufficiently, in fact, from the numbers we've seen in the past, overly shot the amount of income we would have gotten in past years. They overpaid you. Thank you, Mr. Trudeau. So if the real estate industry disagrees and economists disagree, just where is the CMHC getting its insight to support such a steep decrease? And of course, they don't give the answer here, because to hell if I know too. I don't know. Obviously, there's a lot of fear mongering out there. There's a lot of question marks, and maybe they're trying to be ultra conservative because they are insuring you guys. Maybe, I don't know. Because OREA, they recently published a survey that says, and we've talked about this before, that majority think in Ontario, it's important. Housing is an important way of getting us out of this rut. 60% to be exact. It's somewhat important, 32%. So the vast majority do. And OREA itself is pushing the government to stimulate the market with incentives like a land transfer tax holiday, which we've talked about before. If that's a good thing, that's your call. But the point here is this is further demand pressure. If you want prices to slow down, adding a land transfer tax holiday ain't going to do that. And then they say this to wrap this article up. I do think we may see a, quote, hangover from the busy market we're experiencing right now. But overall, as we head into 2021, I think a prediction of more balanced conditions across the Canadian housing market is warranted. But an 18% decline in prices is highly unlikely. And to put words in their mouth, I don't think CMHC is standing behind an 18% decline anymore. But I believe RE/MAX would confidently say that they don't see a 9% decline in prices as a likely scenario either. Interesting stuff coming from RE/MAX. Do you expect them to be anything less than optimistic? I don't. Then I saw another article from the Financial Post. I want to give you the highlights of that. It's called this. Again, why would you invest in Toronto with headlines like this? These are the 5 hottest real estate markets in Canada. And Toronto and Vancouver aren't on the list. Well, that's a bummer. Well, let's see if Toronto is worth investing once we read through the details of this article. I love the clickbait. It's great. In fact, I'm probably going to name this podcast after that clickbait. And then someone's going to say, oh, you're so negative about the Toronto market. August sales statistics released by the Canadian Real Estate Association show the national average sale price for a house in Canada has gone up by 18.5% in the past year. Damn. Is that not crazy? Almost 20% increase across the country. And you think people don't want to live here? While the greatest Toronto area market has been on fire in recent years, posted a sizable year-over-year gain of 11.1%. That's Toronto. What a fail. 11%? What is that? Barely double digits. But it wasn't the only reason driving up price. Well, who are our top 5 hottest real estate markets in the country? Number 1, Ottawa. They were up almost 20%, man. Holy smokes, 19.9. Deborah Bourgouani, I don't know how to pronounce that, we're going to stick with that, president of the Ontario Real Estate Board, hope she doesn't listen to my podcast, said housing prices have increased in Ottawa because of lack of supply. Supply is driving Ottawa's prices. And then we look at Montreal. They are up 16.4%. What's the reason? They say this: our inventory is decreasing rapidly, so the market conditions were in favor of the sellers. Again, seller's market. We move down the list. Niagara, plus 15.3%. These are huge gains, man. If you can buy a property and get twice the house for the same money or less, then what you're leaving now, why wouldn't you? Right? So this is, again, an overflow from Toronto. Same with Guelph. Next on the list, 14.3%. We've talked about Guelph in past podcasts as a trendsetter. Ottawa and Guelph is definitely on my list. Niagara, I think, took me by storm a little bit, but I'm not whining. That is such a bad joke. I hope you get it. Sometimes they're big brain jokes. That's okay. Housing is cheaper relative to the GTA, but still commutable. And then last on the list, number 5, Greater Moncton is up 12.5%. The reason, they say, it has some of the most affordable residential housing prices in the country. So let me summarize the reasons for why certain cities would outperform Toronto across our great country. Number 1, a supply crunch, as we see in Ottawa and Montreal. Maybe we don't have the same supply crunch that they do there, clearly. Number 2, out-migration from Toronto, an overflow from our city, that is Niagara and Guelph. And number 3, well, it's just so damn cheap, how could I not? But of course, Toronto sucks. We don't even make the list. We're not even on top 5 because we only made 11% increase. I mean, is that a lot of money on your $1 million house? No, we might as well go back to work, right? This is where all the investors are all like, you go, girl. But if we're going to address the rapid price increases in these cities, all of them, including Toronto, the only plan of attack is to do what my dad and my granddad and my great-granddad before him used to do. Just for the purpose of this story, they were clowns, okay? You go for the juggler. But clearly, somehow I landed in real estate. Let's just say their shoes were a little too big to fill. All right. But is supply the only culprit? As we move into our next article, movesmartly.com. This is a great one. I love it. Anything that challenges my views or kind of pokes at some of the things I've said in past podcasts, I love it. Feed me, baby. All right, here we go. Why are Toronto homes so unaffordable? Once again, is the real problem supply or demand? As house prices continue to rise amidst the COVID-19 generated economic slowdown feeding concerns about market unsustainability, Canada's housing authorities appear to be at odds. Earlier this summer, the Bank of Canada Governor Tiff Macklem reassured mortgage borrowers that interest rates would remain low for some time to come. But then CMHC's head Evan Siddall doubled down in his fight against the, quote, the glorification of home ownership. Right? Recent economic literature has noted that all, quote, superstar cities, I would assume Toronto will be in that list, given that they're the clickbait of every single article in our country for real estate, displays a similar problem. In addition to supply side constraints, such cities generate demand among higher income households, which crowd out lower income households. Interesting. It does not take an expert to know that the Toronto's housing market is supply constrained, but without a discussion of the demand side, the discussion is incomplete. Man, I'm already convinced, but I want to hear what they've got to say. Demand is harder to talk about for several reasons. Comparing to changes in supply, which are preceded by building permit applications and other measurable factors, demand changes are often harder to forecast or even foresee. At times, demand may be a result of other policy goals, right? Immigration, including non-permanent residents and foreign students, which is vital to Canada's economy and also has an impact on its real estate. When Canada experiences changes in these levels or surges in immigration we've seen over the past 4 years, for example, much of which leads to a funnel to the Toronto area, it is not clear that any superstar city can build fast enough to respond to such a demand shock to prevent upward pressure on houses. Here's a great point. Think of where is that demand shock happening now? Because you would argue a year ago, 2 years ago, that the pressures, the supply crunch that was in the suburb communities, the outer communities, wasn't so bad, right? It wasn't great, but it wasn't as bad as Toronto. Clearly, Toronto had a bigger supply issue. Well, I love this paragraph. The boom in house sales and prices we are now seeing is being driven by the spillover pre-COVID migration levels and cheap money. Add to this an exogenous shock, COVID-19, which can generate a shift to working and schooling from home. And the result is a surge in demand for houses in the GTA outer suburbs and cottage country. Before COVID, there was no significant supply shortage in Clarington, Innisfil, and Essa. These areas were not the hottest market in the GTA, with houses getting 20 plus offers on them in nights and prices now 20% plus year over year as we're seeing them. Incidentally, while the Globe editorial notes that Siddall believes in building housing density on a quote grand scale, right? Because if we're just going to deal with supply, we're just going to build. That'll solve the issue. And I'm a big advocate of that. You know this. You guys know this. This is why I love this article so much. Challenge me, baby. This month's average condominium rents in Toronto are down 13% and falling, and resale condo listings are surging as COVID-19 has emptied denser urban areas of their service workers and students, where 100,000 condo units still in the construction pipeline are due to be added to increasing supply. So in this pursuit of addressing the supply crisis that we've experienced in Toronto, we've ignored demand factors that have shifted. And so all of a sudden, we see the trends that we see today. I love it. I love it. Right? But CMHC's conclusions are problematic, this idea of just addressing the supply side. The reason investors have been responsible for much of the new condominium construction in the GTA over the past decade is not because end users don't want to buy a new home, but because optimistic investors are the marginal buyers in the market who will pay the highest price. It's why pre-construction condos in Toronto area sell 20 to 30% more than the existing resale condos, pricing end users out of the market. It's you damn rich fellows that follow our podcast that are out to make a whole bunch of money, you terrible people. Oh. Anyways, I digress. When we talk about these pre-constructions, just as a side note, TorontoStories.com had an article, and it says this. It's talking about Build. Build made an announcement yesterday, and they said that we have 4,539 new homes were built. That is up 217% from August of last year and 119% above the 10-year average. This also marked the highest number of new home sales for August since Altus Group started tracking in 2000. So the pre-constructions are rolling out super quick. Not only that, single family, detached linked semis, and townhomes, they were up in the number of units 355% from last August. And condos, including low, medium, high-rise, stacked townhomes, and loft units, were up 159%. Everybody's up. Selling numbers are through the roof, and you would think prices would be going higher, but they actually did go down a little bit, but not like you'd expect. Not like if all of a sudden there's a big deal. Where's my deal with the pre-cons? When breaking it down by municipality, Toronto has the highest number of new condo apartment sales. Build says the benchmark price for both single-family and condos dipped slightly in August compared to the previous month. But before you get your panties in a bunch and all excited, recognize that they're up 15.7% over the last 12 months. Meanwhile, resales obviously up 11%, which we talked about in just a minute. So clearly, still too expensive. Let's go back to our last article, shall we? 2017 Financial System Review. The Bank of Canada argued that the eventually unsustainable acceleration in GTA prices. I thought my recording stopped for a second. I thought I lost you. Oh my God, I thought I lost you. Welcome back. Sorry, technical difficulties, moving along. Acceleration in GTA house prices in 2016 and 2017 that pushed prices up 30% year over year was likely driven by investor speculation. So maybe the demand that we need to be concerned about is trying to stimulate these small entry-level homes. This is the reason you see a lot of AREA's calls for being support the first-time buyer, support the young investors, get them in the market. But we're just trying to push up that demand. We're not really dealing with the high net worth investor demand, which is where I guess you get home vacancy taxes coming in. So many things, so many great things on the horizon for us. Let's do a capital gains tax on your primary residence. That would solve things. All of this is not to suggest that there is no case for well-considered supply-side policies, but more often than not, there are insidious problems on the demand side that could be addressed that may offer more immediate results when compared to supply-side policies, which could take decades before they have any impact on the market. Love it. I love it. Thank you for challenging my view. I agree. Demand pressures are a problem too. They really are. Supply still, but demand as well. It's both. Both are the problem, right? We talk about supply a lot, but maybe the elephant in the room is actually demand. We should be taking care of the demand and feeding him with all the cultural and delicious foods Toronto now has to offer. But instead, listen to this parable. I'm like a prophet. Real estate profit has different meanings to different people. We dig ourselves a hole instead of dealing with that demand. And what's in the hole, you ask? Well, a lack of affordability and supply in key areas. For my illustration purposes, we're going to call it the as-hole, A-S-hole. And what do? We sprinkle a little bit of perks and policies around the edges. Let's call it the pee-pee around the hole. And then when the elephant went to take a pee-pee, we kicked him in the as-hole. Write that down. Ephesians chapter 4. Ephesians chapter 7. Has to be unwritten yet. That's a shout out to my Bible readers. Okay, hot topics. Let's do some hot topics before we get into our last one. We got some good stuff today, guys. You guys know there's a big balancing act. You want to talk about a circus. The balancing act is all of the negative news that we experience combined with what people are actually feeling. So let me just read you the highlights from Better Dwelling. If we're going to poke it, let's poke the bear big time here. Here's some of the headlines from this week alone. Moody doubles down on forecast of Canadian real estate prices falling soon. Article 1. Article 2. Canadian condo prices peaked in April. Only 3 major markets now at the peak. Article 3. CMHC, nearly half of Canadian real estate markets have moderate vulnerability. Number 4, Canada's largest real estate markets see permanent residence declines accelerate. And the last And final one, Canadian mortgage debt is soaring, but payments fall over $4 billion. We are going to hell in a handbasket, it would seem. Yet people aren't falling for it. If you read between the lines, listen to this. BNN Bloomberg, they published some stats for us. Canadian households continue to be increasingly optimistic about housing, even as the country suffers through a second wave. Polling suggests about 44% of respondents expect the value of real estate in their neighborhood will go up over the next 6 months. And when you probably thought what I did, that's less than half. Well, that's actually the highest percentage since March 13th, before the full pandemic shutdown began, and one of the strongest readings for this question in the past 7 years. That's crazy, guys. The share of Canadians who expect home prices to drop slid to 27%, also the lowest since mid-March, right? So the news matters, but we got to get both, right? Of course, it is a balancing act, and you can see there's varying opinions between what you're reading in the news and what Canadians feel. I think they're smarter. We're smarter than the news outlets. All right, next hot topic. I saw this article. I thought it was very fascinating because it's very counterculture right now. Is Amazon to expand tech hubs in Vancouver and Toronto. Amazon has reiterated its commitment to expansions of its office space and workforce in both Vancouver and Toronto, and says it plans to hire an additional 3,500 corporate and tech workers in those two cities during the next couple of years. In Toronto, Amazon will lease 130,000 square feet of additional space at a new office tower on York Street, adding 5 floors to accommodate the creation of 500 new jobs. Mayor Tory was very happy about it, of course. He says today's announcement by Amazon is good news for Toronto and a sign of continued confidence in our city and our tech sector. And the commitment matters because we've just seen huge tech giants making moves to pull out and go towards more like remote working models. At least they're considering reducing their commercial leasing footprint. And the move in Canada has been led by Shopify, which plans to sublet 170,000 square feet at its current Ottawa office. And we've seen that trend continue with many of the tech giants. But how interesting is this? Amazon, against all odds, went ahead and they're buying up or leasing up some office space from us. Sweet. Jobs. Man, the Amazon owners continue to get rich on the stock market, as you can see. Not because they create jobs, though. No, can't be that. It's like a circus. They spent years paying their employees peanuts. Hot topic number 3. Canadian mortgage rates are lowest in history. Can they go any lower? I love this. I'm not going to dive too far into it. We'll talk about this in another podcast, I'm sure. But they asked a bunch of expert analysts, and they say this: not by much, but yes, rates will go lower, is the answer from several analysts, citing that the Bank of Canada's policy, competition among lenders, seasonal factors, and the pandemic's impact on the economy mean you might see interest rates come down even more. Surprise, surprise. Demand. CBC.ca published an article. I think this is great. This actually comes from New Brunswick, but I love pulling from outside communities in order to get some thinking that would definitely apply to us here too. So the Premier Blaine Higgs' goal right now in New Brunswick is to attract 10,000 immigrants per year by 2027. Organizations working to help newcomers settle here say the province's housing crisis needs to be addressed. So housing crisis is the main thing they're saying. It's a supply issue, said the big city. Quote, now it's so hard to find another apartment, especially if you have kids. I feel like we have some discrimination against families with kids. This is what I love about this article. You guys know, as landlords out there, we can't say there's discrimination because there's really not. But realistically, I know you have an ideal tenant in mind. And anyone who doesn't fit that description, is that not discrimination? Maybe, but this is a business. LeBlanc said they are getting more reports from agencies that newcomers are having trouble finding housing because they have children. Discrimination, guys, it has many faces, but in this case, it's the turning red and yelling at the top of their lungs in my open house face. Don't climb on my handlebars for the stairs. True story.